Hi, I'm Mehmet Kara. In this video I'm going to talk about one of my favorite growth stocks, the insurance company LMND. Although it's not so volatile like the crypto market, investing in this company has been like riding a roller coaster. In this video I'm going to cover the following: the company business, philosophy and strategy, why is LMND an innovative company, how do their financials look like, why did the stock fall back from the all-time high with 66% down, and why did it bounce back with 50% in the last week. Finally, what is my future price prediction about the stock price. You can find the timestamps in the description below. My channel is all about investing and personal finance, so if you are new here, consider subscribing for more videos like this. LMND was incorporated in 2015 and is headquartered in New York, United States. The company offers various insurance products in the United States and in the European Union in 3 countries for now: Germany, France and the Netherlands. The company also offers renters, homeowners, pet and life insurance products, as well as landlord insurance policies. In addition, LMND operates as an insurance broker for different other products. So what is the philosophy of LMND? Let us hear it from the 2 co-founders themselves.
Daniel and I have both been tech entrepreneurs for 20 years, and it just so happened we were looking for the next big thing. So we started looking at different industries, but when we came to insurance, we stopped.
We had found a destination. The more we thought about it, the more we realized that insurance may be the largest disruptible industry on the planet. Even though neither of us had come from the world of insurance, we found 3 things in insurance that just about never come together, that elusive trifecta. The first one was just how vast the insurance sector is. In America, you're talking about something like 11% of GDP, and it's about $5 trillion worldwide. Some of the largest insurance companies in the world do over $100 billion a year, but none of them has above 4% market share. The idea that you can be a Fortune 100 company and have only 4% market share, that just blew our mind. The second thing that we found was that it's largely unchanged. It's really dominated today by the same companies that dominated 100 years ago, and sometimes 200 years ago, and sometimes 300 years ago. In the United States, 12 of the Fortune 100 companies are insurance companies, and their average age is about 125. 125 years ago, there were no airplanes, there was no air conditioning, there were no antibiotics. So the world has been transformed, but insurance really hasn't. That speaks to a profound opportunity for innovation. And the third element is that it's a deeply unloved sector. In the Urban Dictionary, the crowdsourced definition for the word insurance is a business that involves selling people promises to pay later that are never fulfilled. So we decided to take a run at reimagining it. Our strategy is really quite simple. It begins with being customer-centric, devoutly customer-centric. That may sound trite, but in insurance, it's a formidable task. The very business model of insurance is seen as pitting insurers against their customers. But if you do the hard work of modernizing the business model and actually get to delighting customers, that can fuel rapid growth, very rapid growth. Growth is valuable in and of itself, but for us it does double duty. It generates huge amounts of highly predictive proprietary data. At its core, insurance is about monetizing probability theory, and so a sustained data advantage means a sustained advantage at pricing and underwriting risk. That's the very heart of insurance. Finally, given how our business is built atop of a digital substrate, those data serve as training data sets for many aspects of our business, allowing us to refine our algorithms, increase our efficiency, and lower our costs to the delight of our customers. And so the loop closes, the flywheel turns, and the moat grows stronger with every rotation. That is our strategy.
Now to the point, why is LMND an innovative company and considered a growth stock? The company reverses the insurance model. It uses artificial intelligence, chatbots, and other innovative technologies to disrupt the homeowner and rental insurance models. Speed is a key advantage of using AI technology. LMND can offer a policy in a matter of seconds without any paperwork or phone calls and with full transparency. There is an additional benefit to this model too. The company gets just a flat fee for running everything and pays the claims very quickly. This is why their user base has grown so quickly in the last year. If there is any money left after all of this, the company gives the money, donates it to a cause. To date, the initiative has seen money donated to the funding of a water system for a village in Africa and providing meals for families in Central America. Now to the financials of Lemonade. The last report that we have is for the first quarter of 2021. And there is a shocking picture. Loss ratio through the roof. Combine this with news articles like this, and now you know one of the reasons why the stock price has been beaten down so heavily. But was the report so bad actually? The severe winter storm that hit Texas in February impacted millions, causing power outages, icy roads, frozen pipes, and heartbreakingly a lot of suffering. We received about a year's worth of claims in its first few days, providing an extreme stress test for both our operations and financial model. End of the quote. Sure, the Texas freeze was a shocking event. I don't know about you guys, but I as an investor will be more shocked if I would see some other picture. For example, falling customer count, falling profit margin. Did we see something like this? Exactly the opposite. The customers of Lemonade went up 50% year over year to 1.1 million customers. The in-force premium is up 89% year over year, and the premium per customer is also up 25% year over year. I don't know what you think, guys, but I think the company is heading in the right direction. And now is the moment to remind you that I'm not an investment advisor. I'm just a random guy on the YouTube. So always do your own due diligence before investing somewhere or not. And this is not an investment advice. Now to the stock price chart. Lemonade went public in July 2020 and its share price reached an all-time high in January this year to about $180 per share. Then, in line with the tech stocks, its price declined to about $90. And when we saw the Q1 report with all of the news articles coming out and most of the retail investors being scared without knowing what is standing behind this report, its share price fell down to below $60. And now, in line again with the tech stocks, its share price has bounced back to around $105. So what is going to happen next with Lemonade? There is two big news to follow. The first one is the launch of new products. I mean the car insurance product which they are preparing. And the second one is the launch of new markets. I mean the European countries which are going to be penetrated in the next months or maybe in the next year. But this is planned. So if you give this investment at least a few years to run, I think you could get out with a good profit. But if you are too emotional and if you never hold a stock for more than a couple of months, I would stay away from Lemonade. Because if you decide to invest in Lemonade, be prepared for the roller coaster ride. Currently, my dollar cost basis for this stock is $98, and I can just regret for not having more free money when the price fall down to about $60. So let me know what you have done with your Lemonade shares recently. Did you sell them on profit or are you going to hold them long term like I do? And thank you very much for watching. This means a lot for me. Drop a like or comment below and see you again with my next videos.